Big tech is dead. That is the prediction of more and more Wall Street experts, internet gurus, heck, even a fellow passenger with whom I struck a casual conversation on our flight to Maui advised me that big tech is dead, and 2021 is the year of AMC. But is big tech really dead? Aloha and happy Tuesday from Maui. Today I'm going to provide my thoughts on big tech, where I think big tech is going, whether it is truly dead, and how I'm trading big tech. Before I go further, I need to say that nothing in this video can be construed as financial advice, as I am not a financial advisor. This video is made solely for your educational or entertainment purposes. In the year of Gamestop, AMC, Dogecoin, Shiba, to name a few big gainers, big tech has been a sight for sore eyes for many investors who are chasing the next 10x, 100x, and even 10,000x winner. I admit, big tech as a whole is underperforming, with Invesco's QQQ, which mostly holds big tech underperforming the S&P, the Dow, and the Russell 2000. Big tech is also facing financial, political, and legal headwinds. As many of you remembered, big tech took a nosedive from the middle of February to early March, where many big tech companies, including Apple and Amazon, were down 15+% from their all-time highs. At the time, investors were and still are in some degree spooked by rising interest yields, which admittedly do have an impact on lending costs. On the political front, big tech seems to be the political punching bag for politicians across the political spectrum. Moreover, countries are ever more aggressively coming up with ways, such as digital taxes, to enrich themselves from the profits of big tech. Last weekend, the G7 finance ministers finally reached an agreement after many years of bickering on a 15% minimum corporate tax, which would most likely impact big tech companies, which do pay less taxes on a percentage base than other companies. Apple, the most famous and the largest of the big tech companies by market cap, is currently down 4.5% year to date. Apple, despite reporting banner earnings, including massive beats on revenue and services revenues, is back below 130 and is currently trading a little bit above $127 a share. And in addition to the headwinds I mentioned earlier, analysts are worried about Apple's lack of innovation and ongoing lawsuit with Epic. Amazon, the third largest big tech company by market cap, is down almost 2% year to date. Analysts who admit that Amazon is eating every other retailer's lunch are concerned that Amazon is a victim of its own success and is now saturated the retail market. Google and Facebook seemingly cannot get out of the crosshairs of anyone who has a political say. In contrast, GameStop is up 1,400% year to date. AMC is up 2,400% year to date. Dogecoin, which I admit I do own, is up 7,000% year to date. And Shiba Inu holders will make you think that the Dogecoin killer is up a gazillion percent and will eventually hit $1, which will mean that the total market cap of Shiba would have to reach $395 trillion. So why even bother with big tech? Why not just FOMO into the next GameStop, AMC, Doge, Shiba, or whatever you name it? Well, let's take a closer look at the year-to-date chart of the 5 largest big tech companies. As you can see, the chart clearly shows that big tech is not dead. Microsoft, the second largest company by market cap, is currently up 14% year to date. Facebook, despite all of its troubles, is up 23% year to date. And Google, who many experts gave up for dead last year, is up 37% year to date. In my opinion, the most important considerations of whether a company's stock will go up or down over a long period of time are whether the company is making money, whether it is making more money than before, and whether the company is making more money at a faster pace than expected. Without a doubt, big tech companies not only survived, but they thrived during COVID. Big tech companies such as Apple, Amazon, Google, Facebook, and Microsoft are positioned to further strengthen their financial positions as we emerge from COVID, as the global economy rebounds, and as the masses regain financial stability. The numbers do not lie. And without turning this video into an hour-long video about big tech earnings, I'm just going to summarize and say that most of the big tech earnings, including all of the 5 companies I mentioned, have ranged from good to amazing. And regarding the rise in interest rates and inflation, which will likely exceed 2%, I admit a rise in interest rates do negatively affect borrowing costs. Typically, and unfortunately for the end consumers, companies, including big tech companies, typically pass costs to consumers. A 3% part increase for parts that Apple purchases to make the next iPhone will likely be passed to the end consumer. And further, stocks have typically been a great hedge against inflation. My portfolio currently includes Amazon, Google, Facebook, and Microsoft, and enough of Apple to write cover short puts and cover calls on. Starting with Apple, I've been wheeling Apple by writing cover short puts until I get assigned the stock, and then once I own the stock, I write cover calls until the position get called away, and I repeat the process. I was assigned Apple at $127 a share over the weekend, and I'm looking to write cover calls at the $135 to $140 range with a 21 to 45 day expiration. According to an intrinsic value calculator that I use to determine a stock's value, Google, Facebook, and Microsoft should each see at least another 25% increase. A 25% gain. And finally, I admit, I most recently bought Amazon at close to its all-time high, so I'm taking a loss on Amazon right now. But I believe in Amazon, which is not only dominating retail, but it's also dominating the cloud sector, and in my opinion, will eventually overtake Apple as the largest big tech and publicly traded company. In addition to the 5 stocks, I also hold 1-year out call option contracts on QQQ, which is mostly, as I mentioned earlier, mostly made of big tech companies. And I also wrote 1-year out puts on QQQ. So I definitely believe that big tech, which has been lagging the market, will catch up and eventually surpass the S&P in year-to-date gains during the second half of the year. Unfortunately, I can't log on to any of my accounts to provide technical analysis to big tech companies while I'm staying at a resort that doesn't offer secure internet. So let me know in the comments below if you'd like to see a technical analysis of a stock you're interested in. If you watch my other videos, you know that I also hold blue chip stocks, crypto, and even Dogecoin. Because as much as I believe in big tech, I believe in diversifying my portfolio as I continue my own path towards millions. Let me know your thoughts on big tech or the market in general in the comments below. And thank you very much for watching this video. And if you like the video, please subscribe and hit the bell icon.